Hi traders, still a couple of calls on the DAX, but let me just show you why I didn't call the Dow today, because it's just really tough to trade. This red line here is yesterday's low, or just about, give or take a few pips. So we broke down here end of the Asian session this morning, and just very late Euro session. I've never really recovered. This is the first 15-minute range, which is huge, pretty big. We've been inside it and dropped out again, so that's very tough to trade. So I just didn't call it. Whereas I did call a couple of longs on the DAX. We went long the DAX in the morning. Where are we? This was the 15-minute range this morning. Stayed in it, did 25 pips, that dropped back down again to my entry point, and finally broke up very late, midday, and then I called it down here into the US session, because this was the 60-minute 200 daily average. Oh, I've not got it on here. But I promise you, it's just right underneath here, almost touching, just about touching that low, and so that's done okay. Alright, so let's just look at some daily charts for the moment. This daily DAX is just hanging in, literally just hanging in. If you look at the 60 minutes on this side, we've got them gapped up, pushed into Friday's resistance, dropped back down again, pulled back to Friday's close. So we're flat for the week. We're very flat for the week. Path of least resistance, I have to say at this rate down, because a couple of lower closes here on Friday and Monday, and we're not able to break above it. So I think if we see some moves into 13,000 just above, that may be a good time to get short. But hard to call. If we close above 13,050, then obviously that's very bullish. If we come in and just get some sell signals just around here, 13,000, 13,050, then that's the potential opportunity to short. So not a very good chart to trade at the moment. This pound is trying to hold. This daily chart here is flat after a zigzag, three-way move to the downside. If this is a bearish consolidation, then we need a push higher to short, ready for the next leg down. So I'm suggesting that this could do a wave to the upside and then catch an offer out, and then potentially go down to 130. Because I could change that analysis if we close above 136. But in the meantime, I would look for any short signals up there. Oil is alright. This is holding up, nothing great to shout about. Pound yen. Now this is doing alright. We're very short on data for the rest of the week now. We've got options expiry on Friday. 150 is the obvious place for that to expire at. So if we push higher and then end up at around the 150, just because options expiry doesn't mean to say that's where it's going to close, but let's just, for the moment, this is getting bought. So any pullbacks to 148.50 now are potential buys to see if we can get back up higher. Okay, so that's going to be, I don't know why I've got an arrow there, let me just get rid of that. But the yen is weak, and so that may be a good opportunity to get in on that, and let's see if we can make our way back to these highs again. So I like the pound yen a lot. Gold just fell out the sky today. Looked as if it was trying to buck up last week, but it just hit this trend line and just collapsed. So not good. The problem is these 5-year bonds. Now, why is this an issue? It's an issue because every time that bonds drop, the yield goes up. And every time the yield goes up, it means that the government debt, which this is used to fund government debt, means the government debt is more expensive to service. And so it costs the US a lot more money to run their 21 trillion, or at least part their 21 trillion debt. Alright, so this is a dysfunctional bond market at the moment, which is telling us that the market is convinced there's going to be several rate rises this year, which has been talked about for a long time anyway. But this is a problem, and if you look at the 30-year or 20-year notes, it's not dropping as fast. Now that is the inverted curve, yield curve, where the short-term bonds are more expensive than the longer-term bonds. That is crucial because that has, in previous occasions when that's happened, it's triggered a recession. It's triggered a squeeze on the velocity of money, and it's triggered a recession, which is why this Dow is really struggling. Okay, and even this higher hourly close has just been engulfed because they are just not holding it up. Alright, well, there's plenty of time to get in on this because now we know this market's not going to hold. We can short the pullback, hopefully. We'll talk about that in the morning. Hope that helps. See you in the room tomorrow.